Hi, this is Mike Hoffner and Dan Sturm with McKonly Asbury. We appreciate the chance to spend a few minutes of your day talking about the new leasing standard. As you recall, the standard was issued in early 2016 and will pretty fundamentally change the way we account for leases from what we historically have done. Our purpose today, though, isn't to talk about what the standard says. Our purpose is to focus on what you should be doing and thinking about over the next year as you prepare for implementation. The rules have changed dramatically. We have a few years to be ready for them, so let's just take some time and think through an effective and appropriate implementation process. Before we talk about the specifics of implementation and things you should be thinking of, though, Dan, why don't you remind us of the key requirements of the new standard?
Thanks, Mike. And as we mentioned earlier, this is not intended to be a detailed analysis of the actual technical requirements, but just to give you a high-level overview. But for all leases with a term greater than 1 year, basically what's going to happen is those leases are going to go on your balance sheet as a right to use that asset. And it also brings up technical discussions of financing leases versus operating leases. But for purposes of this presentation, when you think financing leases, think capital leases. As far as your income statement, as we just talked about with the financing lease, you're going to have amortization expense and interest expense similar to what you've had in the past. Under an operating lease, you're going to have lease expense. You're going to want to evaluate all different types of contracts that may be considered a lease for these criteria to make sure you implement them properly.
Thanks, Dan. Yeah, that truly is a 50,000-foot version of the new standard. And for those who haven't done a significant amount of reading or research, please reach out to us. The intent today wasn't a technical understanding, but we do want to make sure you have that baseline, so let us know. But moving on to where we really want to be is the things you should be thinking about now. It's 2017. Is the year of implementation for you to be ready for 2019 on an effective date. First and foremost, you need to understand what leases you have. Assemble your details, catalog everything you have, make sure you look at contracts, as Dan said, for embedded leases, and understand and write down in one place every single lease that you have in the organization. Dig through those file cabinets and find the ones you may not be thinking of. You need to educate. Educating your stakeholders on what's coming. The balance sheet's going to look different. There's going to be new liabilities and new assets added, and management needs to understand those. Those who are measuring the organization need to understand those. And importantly, your lenders, your bonding agents, external users need to understand what's coming on your balance sheet in a few years so that they can prepare for it and modify any of the way they look at your business to understand what they're going to see. Also, you need to understand impact on other areas of your business. Income tax laws aren't changing for this particular area, so make sure we understand the impact on your tax calculations. Information technology in a heavy leasing organization or industry, you're going to make sure you need you have the technology to properly manage and account for the new standard and how it's going to impact things. So there is some work to be done on the IT side. Well, much of this can be done in Excel on smaller businesses. Something to think about and assess now, because implementations, as we know, take time. Once you have that understanding of the leases in place, you need to start modeling out what the balance sheet will look like. This means putting together an assessment of what the capitalized amount will be for each of those leases and starting to figure out what your P&L is going to look like as those items amortize out. We need to educate again. Once we have that model done, what does my balance sheet look like in 2019 and 20? I need to educate those stakeholders again. Now that I've educated them conceptually, I need to educate them with the actual numbers. Once they understand everything, we should be good to go. We need to develop processes and document processes on how I now manage operating leases going forward, how I communicate within my organization when lease terms change, how I do impairments. So just think about processes that need to be documented and put in place, because you have time to do it, but it's going to go quick. The final point I wanted to make was regarding the new revenue standard and how that's going to impact financial statements. The revenue standard is effective 1 year earlier than the leasing standard and will also require some significant change in disclosure in your financial statements. Early adoption of the leasing standard is permitted and may be worth consideration when you think about adopting all those changes at once, as opposed to educating stakeholders on 2 separate years' worth of changes. We appreciate you taking 5 minutes out of your day to listen a little bit about leasing standard and the transition necessary, and invite you to reach out if you'd like assistance or further details on the standard or the steps that you need to take. Thank you.